Morning, folks. It's the 10th of December. We've made it to the end of the week. I'm Joe Neighbour. This is Talking Bull with Signal Centre. No Steve again today, feeling still a little bit under the weather. Hopefully, he'll be back next week. So, getting straight into it, all eyes today on the US CPI number, probably bigger, the biggest number that's come out for a while in terms of macroeconomic data from the US. Some calling it bigger than even non-farm payrolls in terms of its impact that it could have this month. It's coming out on a Friday. Typically, that isn't the case, so be interesting to see what sort of impact this has and how it will leave markets carrying on into the weekend. In terms of the economists and what they were forecasting a year ago, that was set to be at 2%, but we're projected to hit 6.8% in November when the data comes out later. That would be the highest in the lifetime of most Americans, and obviously an indication of how the pandemic has fueled an inflation shock of a generation. So we'll wait and see what comes out later today. That's due out at 1:30, and as I mentioned, prices expected to rise quite substantially in November. We'll come on to that again shortly. In terms of what's going on the corporate front, Elon Musk continued selling Tesla shares for a fifth straight week, coming closer to his pledge to offload that 10% of his holding. The billionaire founder sold another 934,000 shares approximately for around about 963 million in order to pay taxes on the exercise of 2.2 million options. That's according to the regulatory filings that were dated on Thursday. That brings the total to about 11 million shares that he's offloaded since he did that poll on Twitter last month. Joe Biden underscored the US support for Ukraine yesterday in a standoff with Russia and pledged not to hold talks about the country's future without its representatives at the table during a phone call on Thursday. Obviously, remains to see how that situation develops. European indexes are pointing lower today. We are pretty flat, however, looking at the charts and the watch lists at the minute. So we'll come on to the charts now. That's pretty much all on the headline front. So going to dive straight into FX to start with. Just need to share my screen. And I'll be starting with dollar index today. So that made a bit of a comeback yesterday, posting a green candle following that fairly large red candle it posted on the 8th of December. All in all, it's still trading within this bullish channel. We've got a triangle pattern that appears to be forming at the moment on the daily chart, which would indicate some consolidation and a bit of indecision. So what we're looking for now is a break in either direction. If we get a break to the upside, then we can be quite confident that this long-term trend is going to persist. And if we get a break down, then we could see a prolonged correction down to the lower end of the bullish channel and also a confluence of support levels between 94.74 to 94.47. So remains overall, I think, bullish, but probably limited opportunities if you're looking to trade this today. But again, all eyes will be on this CPI number today. That is likely to have quite a significant impact on anything linked to the US dollar later this afternoon. So let's take a look at Euro US dollar. And as you'd expect, given the strength that we saw yesterday in the dollar index, we saw some weakness in euro dollar yesterday. Wasn't able to undo all of the gains that we saw in the previous session on the 8th of December, which is quite a good sign, I guess. And the reason I've got this blue line on here is to indicate that there was a higher low. So maybe what we're doing is forming a very short-term bottom, which could lead to a corrective move higher. Ultimately, I think it's going to be a short-lived correction, and I'd be looking for resistance at 115.25 really to cap any upside advances on euro US dollar. So still looking for lower prices. Clearly the trend still remains bearish, but again, all up for grabs today given what we've got coming out from the US with regards to this CPI number. Okay, let's look at cable next. So that continues to trade lower. We've got this double top that formed. We've got a 38.2% fib level from this entire recent up move from the lows in March last year up to those highs that we posted in June earlier this year. The 38.2 is still doing a job. It got another test yesterday and came through it quite well. We're still above this key level now at 131.65, and while that's the case, there is potential for consolidation or at least sideways price action in the very short term. If this level breaks, then obviously that will invalidate the support level and we can start looking for lower prices. I don't think this is one of those levels that you can really sort of hang your hat on it and it being a sort of huge pivot. I don't think you're going to see any kind of big bounce to the upside. If you do see a bounce, it's more likely to be a corrective one into the downtrend and provide fresh opportunities to offload longs if you're long from down these regions, or initiate fresh short positions. Taking a look at some of the riskier assets, Aussie stalled a little bit yesterday following the strong bounce that's taken place over the last 3 sessions. We're a little bit in the green today, not by much, but again, this is going to be influenced by that CPI number at 1:30 today. So we'll have to wait and see what happens. We did see a breakout of this short-term downtrend channel, and that could lead to a correction higher, but we'll have to wait and see. I think overall the trend remains pretty bearish, so any move to the upside is likely to be only corrective and quite short-lived. That's pretty much all I wanted to cover here on the currency side of things. So what I'm going to do now is take a look at some of the crypto markets. They took a bit of a hammering yesterday. As you can see, this is Bitcoin 78.6% fib level on the daily chart from this most recent swing move. So from these lows here on the 21st of September to the all-time highs posted in the on the 11th of November. Been really quite a sharp move lower. We had this flash crash, which was a week ago today. And sometimes when you get these flash crashes in markets and they leave these sort of prints right down here at low prices before recovering, they can often be a bit of a target for price action in the short term. So I wouldn't be surprised if we do go and see a retest of that low that we printed on Friday at 42,333 on Bitcoin. And then, of course, below that, we've got a couple of strong levels to keep an eye out for. We've got the nice round 40,000 level, and then we've got this previous swing low here from the 20th of September, which comes in at 39,600. If we start taking out those levels, then we're back into really sort of range trading territory, and we could see a retest of this 30,000 level. And maybe we could be in the process of forming quite a large top on the price of Bitcoin. So one thing to bear in mind, I guess. We take a look at Ethereum. That's trading in a very tight range actually on the daily chart, the lower end of which is coming in at 3,885. The flash crash low last week was considerably lower than that, actually down at around about 3,591. So we could see, like with Bitcoin, a retest of that level. The market will be maybe targeting that kind of region. I think if we see a close below 3,885, then we could trigger some more selling pressure in Ethereum. Okay, looking at crude oil now. Just get rid of these drawings that I put on there yesterday. I may end up drawing them again shortly, but overall, we did see a bit of a reversal yesterday in the price of oil. So posted a bit of an engulfing candle following 3 decent days of strength. We are posting some small gains today, up by around about 1%. Typically in any other market, 1% would be a good move, but given how volatile this has been lately, it's quite a small move. We've still got this big resistance level up here at 74.82, and that would also, I think, represent a retest of the underside of this broken bullish channel. On the downside, the 38.2% fib level at 65.40 has done a reasonable job of supporting prices, and below that, we've got this key low from the 23rd of August at 61.69. So for me, I think the upside could be capped at this level, and I've talked about it a lot this week and drawn, these silly drawings on the charts, but is this some sort of rounding top formation taking shape here on oil? And if it is, then that would be quite a sinister looking pattern. If you are a technician or like looking at charts, then head and shoulders tops are often considered one of the most powerful reversal patterns in technical analysis. And it's very early to call it that at this stage, because in order to actually confirm that that is a pattern, we need to see a break of a neckline, which for me is now around about this sort of 61, 69 level. So remains to be seen, but I am cautious on this and think that we could be in the process of forming a top. If we take a look at gold, I've not had much positive to say about gold for some time now. We did see a breakout of this trend channel. that was a bit of reason to get excited. Steve has been talking about this for a number of months, actually, looking at it from a weekly perspective, believing that this was actually a bullish flag and that we'd see a continuation to the upside. It failed quite spectacularly. It's back now within this channel and really not doing an awful lot. We've got some support at 1745. I mean, arguably, you can say there's some support ahead of that as well, around about 1760. But all in all, price action is really quite poor here. So be careful if you're trading gold. I know people, get loved up to these to certain assets and trade them religiously, regardless of what the price action's doing. But I just don't see many opportunities here at the moment. That'll do for the commodities roundup. So let's just take a brief look at indices. FTSE 100 now very slightly positive on the day. Yesterday we saw a little bit of a reversal just in front of this previous high at 7,405. We posted this red candle, as you can see, but we're lingering in and around this zone, so we could see a test of this level at some point. I guess we could be influenced quite heavily also by CPI today in the US, because there are so many US constituents that have a very big saying or a big weighting in the FTSE 100 index. So it could be an interesting time for the FTSE as well. All in all, this market has actually outperformed a lot of its peers recently, and that's quite surprising because typically FTSE has been a bit of a laggard when it comes to performance on the global scale. So we'll wait and see what happens there. It's very close to those highs. If we get a breakout, then you may also notice this downtrend blue line, which comes in from the previous all-time highs, which we have to go all the way back here to May 2018. So if we do get a break of these highs, and we also take out this downtrend line in the process, then I think that'll be a pretty bullish sign for the FTSE, and we could see a continuation higher in line with the dominant trend. So worth keeping an eye on this zone here. If we take a look at the DAX, that stalled again yesterday. I did do it again as the gun to the head trade, and again managed to make a bit of a return on that. So this 15,863 level appears to be doing a job. We've seen 2 consecutive down days. We've got some more red showing on this at the moment, only down by 0.1%. So, are we forming a top here? The price action appears to be rounding off a little bit, and it is stalling. It's not quite near the highs like the FTSE is. So, while that's the case, and while it remains below this level, we could see a bit more weakness on the German market. Take a look at the US markets. They still remain pretty much within striking distance of all-time highs. It was a bit of a weak day yesterday for Nasdaq, posting quite a meaty red candle actually. But again, all eyes are going to be on this CPI figure later today. Maybe we are forming some sort of rounded short-term top on this, but clearly the underlying trend remains very bullish. And I think as long as it remains above this trend line here in red, then we can still expect to see higher prices and dip buyers remain interested. Overall, clearly, very, very strong trend. Similar situation for the S&P, again, striking distance of this all-time high that's now at 4,744. Bit of red yesterday following 2 really strong days, then a doji. Bit of green on the screen today on the futures, indicating 0.25% higher on the open. Looks pretty positive overall. Again, maybe a bit of rounding formation in the very short term, but over the long term, things remain very strong indeed. And then finally on the Dow Jones, a little bit below what the S&P and the Nasdaq are doing. As I mentioned yesterday, this actually looks quite similar to the DAX market in that it's forming this sort of rounding top, and it is struggling to get above these resistance levels here around about 35,900. So all in all, I think Nasdaq and S&P probably look a little bit healthier, but it's not far away from those all-time highs, and if it breaks up above 36,563, then we are probably good to keep going. That's the roundup on the technicals. Hopefully Steve will be back with me next week and we can do something a little more comprehensive. In the meantime, this was my gun to the head trade from yesterday. As I mentioned, I traded DAX again, 82 ticks yesterday, 0.99R on the session. So that's 3 wins on the bounce, which is very welcome indeed. So what am I going to do today? Obviously a big day with this CPI figure. And that's going to make things very difficult. I mean, obviously, if we do get any big moves and some big follow through, then that could be very handy, providing you're on the right side of it. but that's obviously the key challenge of making sure you stay in the trade and don't get knocked out on the volatility. So let's just have a quick flick through and see if anything takes my fancy on the currency side of things. Don't want to take too long. Let's have a look at the cryptos because they've been quite interesting of late. Okay, I'm going to take a look at Ripple actually. So this is the daily chart. So Ripple has been lagging some of the other currencies, cryptocurrencies that is. We saw a breakdown on the flash crash last Friday. It's been actually failed to get above this 85.90 level. Seems to be stalling. Big doji candle formed yesterday, bit of follow through selling today. So I'm going to sell that. So it's looking at the daily chart. In fact, I'm just going to do the idea on the daily chart. Can sell it there at 83.66, stop loss at 94.00, and I'm going to target a move down to those flash crash lows at 57.56. So that represents 2.5 R on Ripple today. So that's my trade of the day. Good luck if you're taking a look. Okay, so data today, as mentioned, it's all about CPI, which is due out at 1:30. I've got some conflicting figures actually here. The Bloomberg report saying it's projected to hit 6.8% in November, but according to the economic calendar that I've got here, the CPI suggested that it's going to rise to 6.4% year on year and 0.8% month on month, and that the core CPI is to rise 0.5% month on month and 4.7% year on year. So, take a detailed look into that and do be careful. Be aware of what numbers the markets are expecting and have a plan for those numbers either beating expectations or coming in below. At 3 p.m., we also have the US Michigan consumer sentiment figures for December. Index is expected to fall to 67. Although it's put on my calendar here as a high impact event, I think it's probably going to be fairly insignificant compared to that CPI number. So do be aware of it anyway. It's out at 3 p.m. Okay, that's it from me. Hope you've enjoyed watching this week. As I said, I'm hoping Steve will be back and wishing him well over the weekend to get some further recovery in, and we'll be back on Monday. Have a great weekend, everybody. See you soon. Bye.